Welcome back to the channel and welcome back to another weekly price action review. So this may be the first one of the year. I'm not 100% certain, quite possibly, but I think now is the time to start getting into these with regularity, and bring in the necessary content to the channel. More so, as I said, to aid my development, and if it can aid anyone's development along the way, then um, I think that's a double bonus. So this week, let's go out to the weekly. So this week, I believe that it was a very unpredictable week, and one that if you did not exude patience, you would get found out in this week, because the market, in my opinion, was leaving a number of traps, and you really needed to be patient. And there were certain things that I took away from this week that will stand me in good stead. I didn't take any trades this week. My models just didn't form. In actual fact, I think one model did form, and that was probably a trade that I should have taken, but probably not as prepared to take it. In fact, if I recall, I think it was on Tuesday, and yeah, I think because of personal circumstances and so on, it wasn't a day that I could actively trade the market. I would have been in and out, in and out, in and out, and I don't believe that is the best way to trade the markets. I think you have to be absolutely focused. And people who sit there and say, oh, oh, you only need to trade for 1 hour or 2 hours. I think, okay, fine, if that works for you, great. I don't believe that that's the case. I think you need to treat trading like it's a proper job. I think when you look at all of these proprietary firms, and when I say proprietary firms, I mean proper firms, these US based firms, hedge funds, all of these sorts of kind of institutions, they don't just trade for 1 hour a day. Their employees come in and they're there throughout the entire session. Now, they may execute at different points of the day, but you need to be engaged to understand what the market's doing as per your game plans and ready to execute. So Tuesday for me was not a day that I could actively spend in front of the markets. Therefore, it was one of those days where I decided that, let me just take a back seat. If something forms, it forms. If it doesn't, it doesn't. We just keep, moving forward. So without further ado, let's get into this and let's see what my takeaways of weekly price action was. So following the previous week's price action, I was actually anticipating a continuation of higher prices in alignment with the higher time frame order flow, targeting this old high weekly. And this was following this high time frame SMT here at the lows, which was confirmed on both the daily and the 4 hour time frame. So various confluences on those time frames supported the idea of higher prices. Plus, we do have this weekly bullish order block here. Why is this a bullish order block or a high probability order block? Because as we can see, this order block here ran out this liquidity below here before repricing higher. So furthermore, the market traded up to and through this SIBI weekly here, closing above. So a violation of a premium PD array, and that in my book is a clear sign of support for higher prices. So that's why I had a bullish outlook. But ultimately, the market traded down again into this weekly high probability order block before rejecting from within a key price level within this order block, and repricing higher. But as we can see, repricing higher but failing to purge this previous weekly high, let alone the old high up here, before ultimately we see it retrace back into the weekly range and essentially form an indecision candle. So very indecisive price action during the week. So if we drop down to the daily time frame, let's just get this. Let's get that. Okay, there we go. So again, following on from the weekly time frame or the weekly commentary, just bear with me. Excuse me there. So yes. So yeah, from the weekly time frame where I, ultimately noted, my anticipation of a continuation of higher prices based on those confluences discussed. However, we know how the market gapped down at market open for the week, and ultimately gaps, rejects aggressively all the way down into the BISI daily. Now, the belief is that it's due to the Chinese release around its AI platform, and the sort of news surrounding that was the catalyst for that aggressive move lower. But obviously, we can see that the market rebounded once it traded down into that BISI of fair value and repriced and ultimately repriced higher. So yeah, so repricing higher from here back into that daily range. So the market obviously rejecting on this same day, which is interesting in itself, rejects on the same day. But as it traded lower into this BISI daily, we get this high time frame SMT or PDA SMT with NQ. So if you look at the lows, I think NQ probably even purged this low as well. But that in itself set the catalyst, as far as I'm concerned, to seek higher prices once we had noted that high time frame cracking correlation. Okay, and so ultimately the market reprices back into this range. But once this SIBI is confirmed, because you got to bear in mind at this point the SIBI is not confirmed. It's not really confirmed until this third candle has established itself. But we do also have the volume imbalance in here as well. And so if we look, the market essentially just consolidated for the remainder of the day. We can see at the lows that the market never purged the previous daily low. Yes, it did run some previous daily highs, but if we look at the bodies of the candles, they just did not close inside of that SIBI, which is interesting in itself. Now again, that could be the market engineering liquidity at the highs, quite possibly, or even engineering more liquidity at the lows with these failure swings below the marketplace. So ultimately on Friday, we know that how the market trades higher, and so into this SIBI daily before rejecting and repricing lower, but again failing to take out the previous day's low. Okay, so this signature here where we've got the SIBI, some people will use this BISI in here, I use this one. We have this signature of trapped liquidity between two imbalances, and this signature indicates low probability conditions until the market commits in a direction where it wants to, violate or disrespect or what have you, one of these imbalances to show commitment and follow through. So this is likely engineering liquidity and so forth, waiting for NFP next week. As far as I'm concerned, the market, there's potentially this, but the market ultimately didn't really present any high time frame cracks and correlations to provide a real potential trade idea. Right, so let's drop down to the 4 hour where we could get a little bit more granularity. So a lot of what we've discussed on the daily time frame, at the open we see this gap down, following the as I say, the Chinese news. Market trades into the BISI as we discussed, forms the high time frame or the PDA SMT before retracing back into this daily range. what we know is that as the market trades back into the range, the market trades to and through this SIBI, forming the inversion fair value gap. And that in itself is supporting the idea of higher prices. Okay, so we have a high time frame cracking correlation at the lows inside of the BC, the BC daily. Then we have this invalidation here of a SIBI. That's giving the indication of higher prices. Okay, so the market continues to trend higher, purging previous daily highs. As we can see, ultimately, this one here and then this one here. But it was doing it in a very, I want to say, symmetrical fashion. Yes, there is SMT here, but it's not something that I could ultimately take. Just based on where price action would have been at the point in time to have engaged the market. So we know how the market old lows are being manipulated whilst old highs are being displaced through, so an indication of higher prices. And like I said, the market continues to reprice higher, then back into the range. But I know how the market was not respecting the discount imbalance here like NQ was. So this in itself, once I saw this, so you've got ES trading to and through, closing below. However, you've got NQ finding support with the bodies of the candles, not even, I don't believe, violating CE. Might be wrong there, but certainly didn't invalidate the BISI. So that in itself suggests that NQ is the leader seeking higher prices with ES weak. Okay, so essentially, once the market trades into a premium key liquidity pool or key price level, once we see a form of market reversal, we can expect that ES will be the more aggressive to the downside. So ultimately, this market here trades up into the SIBI H4, and then we see this rejection here. And again, if you go and check NQ, I don't even believe gets to its BISI, whilst, as you can see, ES has traded to and through it to close the week, suggesting that it may want to continue lower. Okay. So now we're going to get into okay. So very quickly, obviously you can see my annotations on the chart here, but we'll run through some of the key elements of this. So Monday, this is a day where I do not trade the markets. As I've always mentioned, I prefer to see how Monday prints and confirm specific key price levels before looking to formulate ideas for the week. Okay, but just to note, the market did trade down, form the PDA SMT at the lows with NQ. Within that BC daily, supporting the idea of higher prices, following this aggressive move lower over here. Okay, so the Tuesday, following Monday's PA. So now, if you think that we've had this high time frame cracking correlation, markets traded higher, have we traded through this H4 SIBI forming the inversion. So this in itself was a clue to anticipate higher prices. Okay, so following setting the SSL Asian range, so sell side liquidity pool for Asian range, and the London low, the market then displaces higher. So we see this higher with fair value gap in here. So ultimately it trades higher to set the London high. Okay. Then we see this big move lower, or a decent sized move lower, where we see a purge of both the London low and the Asia low. And this is where we form our low time frame SMT. Now this is where the potential model formed, because the market ultimately then displaces higher following the equities open and also the high impact news event. Market trades higher, purges this London high, continue higher all the way up into the volume imbalance to set the high of the day. This in itself created the potential trade idea. Okay, but as I said, I wasn't in a position to really execute with confidence, having been in front of the market during the day. So we head into Wednesday. We'll see this consolidation still trending high. We head into Wednesday, where the market now opens and immediately reprices higher, purging this previous daily high during the London session. Okay, which in itself immediately creates SMT with YM. I believe it was YM. Okay. Okay, so, but for me, because this Kraken correlation forms during the London session, that typically would mean anyway, I need to wait for the New York AM session and post equities open before engaging the market. Okay, so the market did form this low time frame SMT here. However, because of when this formed, the market had already tapped into this H4 inflection point, this BISI, and unfortunately, this meant that this is a POI that the market could legitimately reverse from and continue higher. Therefore, I'd have been offside. And also with the high time frame institutional order flow being bullish, there's certainly a chance. Now, and again, if we looked at NQ, that's exactly what happened. So ultimately, that was not a trade idea that I could fundamentally take. Now, if it occurred, say, somewhere up here and gave enough room to frame a trade, well, then that's completely different. But this did not. So ultimately, market trades down. Then we get the FOMC news, and we see the market just sort of chop for the remainder of the day. Okay, and so then we head into Thursday. We can see how in the Asian range the market has displaced higher, quite clearly displaced higher, and then we get this consolidation headed into true day open London session. Okay, we see how we have the AR high formed in the market. Essentially, doesn't really do a hell of a lot, but forms then this London liquidity pool below the market, the London low. Then obviously we see the markets again during London just reprice higher, purge the Asian high, sets the London high before we see this move lower where it purges the London low. Now, we obviously see when the market, initially went to trade and form this London high, it failed to trade up to this previous day's high that it, rejects. and purges this London low. But that's interesting in itself. Okay. Um, and the reason being is because now we're seeing liquidity being swept on both sides of the market. That's a clear sign, a clear indicator of a potential seek and destroy market profile for the day, which ultimately is what ensued. So again, the reason why we're saying that is because you have the Asian range high. You know, we don't really have an Asian range low because it's all the way down here. But we have the Asian range high. Market trades down, purges that, sets the London low. We've got the London high set. Then the London high comes down, purges the London low before the London low goes up and purges the London high. So sort of like seek and destroy. Okay. So the market then, so as I said, seek and destroy. So at the time, as I said, it was important to note that despite ES not respecting this BISI H4, NQ did support the idea of strength to the upside. So naturally, NQ would then be the asset would want to concentrate on if we are looking for higher prices, which we were. Then ultimately we see how the market, is just chopping and then begins to sort of trend higher, and ultimately purging this previous daily high here. So right now we've got to the end of Thursday and there wasn't really anything in the market other than my model that formed on Tuesday that unfortunately I was unable to take. There is nothing in the market here for me to really action. And this is why I mentioned and made the point that patience was massively important during this week. And to be honest, patience is a massive ingredient to a successful trader. But this week highlighted why and how it's so important, because there were many traders who were taking unnecessary losses because they were trying to force their will onto the market, and you just can't do that. I'm not saying that there wasn't a lot of traders who made a significant amount of money, because they were, but just making the point that there were a lot of traders who didn't. So come Friday, the market opens. The market opened and began to reprice higher, leaving this BISI H1, which could likely support higher prices if it was traded too. And this actually formed part of my game plan ideas. So following the creation of the BSL London high, or the London high, the market purged that London high and formed low time frame SMT. Formed low time frame SMT before repricing lower into this BISI H1. So this is where I wanted to see a purge. I wanted to see the market purge, form SMT inside of that BISI, so I could look to take it for higher prices. But unfortunately, the market didn't do that. We had symmetrical price action here in that BISI. And unfortunately, then there was no trade idea, and then we see the market continue higher, trading into the CBH4 to set the high of the week, and then the market displaces aggressively lower, back towards the true week open before closing for the week. So that was my takeaway. I know it's a lot of sort of information to take in, but that's how the week ultimately panned out. There was nothing really I felt rewarded enough that it was warranted any risk. So I stayed on the sidelines. And like I said, Tuesday, yes, would have presented the opportunity of a trade idea. But ultimately, it wasn't to be. So we keep it moving. But that's how I looked at the markets this week. I'm sure you guys have got your own takeaways from the market. And one of the key things that I always say is once you've analysed the market, you've taken a step back and had a look at it, then you want to get into your key takeaways and identify the things that you saw where you can make refinements to your models, your game plans, risk management, whatever it is, what you've seen that is going to encourage you to make another small step forward the following week. So I'm going to leave this one here, folks. Hopefully you've taken something away. It was a bit of a rusty one, being, I think, the first one back for the new year. But as we sort of get into the flow of these once again, that feeling will come back and things will flow, and hopefully be something that you enjoy, and hopefully there'll be many successful trades that I'll be able to discuss during these sessions as well, and just sort of be able to give trade recaps and so on. So anyway, with that being said, I'm going to leave this one here. As I said, hopefully you've taken something away, and guys, I will catch you next week in the next one.